Interest Rates by Lisa Rittenhouse. Nominal interest rates. These are the interest rates quoted by banks and other financial institutions that indicate the rate at which money will grow if invested for a certain period of time. Interest rate given of a bond or a loan. And a nominal interest rate is the monetary amount that borrowers pay to lenders for borrowing money. If the nominal rate is at a 5% rate, then the borrower can expect to pay $5 for every $100 borrowed from the institution. Nominal interest rate doesn't reflect inflation. Real interest rate is the rate of growth of purchasing power after adjusting for inflation. Real interest rate is a little more complex than the nominal interest rate. If a bond that compounds annually as an 8% nominal rate and the inflation rate is 5%, then the real interest rate is only 3%. Nominal interest rate minus the inflation equals the real interest rate. Effective annual rate. Effective annual rate, known as EAR, or annual percentage yield, APY, is the total amount of interest that will be earned at the end of 1 year. Effective annual rate takes the power of compounding into account. Example, if a bond pays 6% on an annual basis and the compounds semi-annually, then an investor who invests $1,000 in this bond will receive $30 of interest after the first 6 months. So that'd be $1,000 times the 0.03, and the $30.90 of the interest after the next 6 months. So it'd be the $130 times 0.03. The investor received a total of $60.90 for the year, which means that while the nominal rate was 6%, the effective rate was 6.09. Annual percentage rates. Annual percentage rate, APR, indicates the amount of interest earned in 1 year without the effect of compounding. Broader measure of the cost to you of borrowed money. APR is not only the interest rate, but the points, mortgage broker fees, other charges that you pay for getting a loan. APR is higher than your interest rate. Simple interest is another term. It's the interest earned without the effect of compounding. So the interest rate equals the principal times the rate times the time that you have the loan. So for instance, you borrow $100 or $100 in principal you're borrowing times the 5% rate, and you're taking out the loan for 24 months, it would be $120 that you would pay for your interest. Unethical issues. Predatory lending benefits can be unethical by lending money to customers and hindering their ability to repay the debt. These are places that you go, like cash advance. It would be any type of institution that offers like to people who doesn't qualify for a normal conventional loan. They offer you loans and a fast way to get money at a very high interest rate. Predatory lending target minorities, the poor, elderly, and people needing cash immediately for emergencies because of just what life throws at them. They target people with poor credit who have any issues with loans, or people who have lost their jobs and maybe trying to find a way to provide for their family. These places are unethical, and even though they are not breaking any laws, they are taking advantage of people. Like the other predatory lending practices would be paycheck loans, pawn shops where you take items and sell, but that you don't get nothing for them, advanced fee loan scams, credit repair companies, and rent-to-own plans. The Bible on ethics with interest. There were many verses in the Bible regarding lending, which was kind of surprising to me, and what you should expect for repayment. Many verses talk about not charging interest to your brothers, but helping them out when they are down. Exodus 22:25, if you lend money to any of my people with you who is poor, you shall not be like a money lender to them. You shall not exact interest for him. According to the Bible, I believe that God would look down on companies that try to profit from people being down on their luck. This is something that it's a quick way for businesses to get money. And a lot of times these places you have to put something on the line. So if they don't make their payment, they're going to get their money regardless of what you sign, like as far as a car or something like that. So it's just a way that they're hurting people who are already struggling. So these are my references for the PowerPoint.